yesterday, no, wait, this morning, gosh, the time is flying. This morning, you guys met Philip Cochran and Christina Atkinson. As we're moving into the roundtable, I'm going to introduce the rest of our senior leadership team. They can't hear me on the live stream. I'm sorry. I was sitting here talking about our EVP and COO, Jeff Dado, who can't join us today for the roundtable. He's in Chattanooga for the league event, but I won't repeat everything I just said, but I hope you'll get to meet Jeff Dado. He's a great addition to our senior leadership team. Okay, so I'm going to introduce Jeff Mary. They gave me bios to read, and these people are my friends, and I've known them for 16 years, and I'm going to read them, and then I'm going to add some of my own color. Jeff Mary has been the president and CEO of VolCorp since January 1st, 2016. His background in the corporate credit union system includes experience as both chief investment officer and chief financial officer. In addition to his current responsibilities at VolCorp, Jeff serves as board member for Primary Financial Company and for Credit Union Business Group, CUBG. He also serves as the chairman of the board for both Symphony, VolCorp's wholly owned CUSO, and for the Corporate Credit Union Alliance. Jeff graduated summa cum laude from Belmont University with Bachelor of Business Administration degree with an emphasis in finance, and top of his class from the Owen Graduate School of Management at Vanderbilt University with a master's in business administration. His proudest accomplishments, however, are his incredible wife, Tammy, and his two beautiful children, Morgan and Scarlett. I know, I just choked up on your kids. Okay. Okay, so I'm standing here looking at Jeff and I'm thinking, what could I say about Jeff? I wasn't sure about Jeff at first, the CEO, and it's not because I didn't think he could do it. It's just like I didn't know him really well. Like I was in operations and he was an investments and finance person. He was real quiet and he writes like really little. You can't read his handwriting because it's like this big. So I just didn't know. But I actually, strangely, during COVID, have felt like I've become closer to Jeff than I have in 16 years. And I think that we're kind of getting each other now. Yeah. Jeff's a great guy, guys, and we're so glad to have him at the helm of VolCorp. So thanks. Justin Holt, you up? Justin was named Chief Financial. I'm sorry, I'm reading the wrong guy. I'm out of order. We'll do Justin next. He was named CFO this January, so he's the new kid in town as far as senior leadership. He directs the finance and accounting departments as CFO at VolCorp. He joined VolCorp in 2006, beginning in operations as a member service representative. Over the past 14 years, Justin has worked as an IT support engineer, investments representative, financial reporting manager, controller, and then some things I don't think are on here, business development representative. And then there was that one time that you wore that Evel Knievel outfit. Yeah, that was a true story. Justin is a graduate of Western Kentucky University, where he earned his Bachelor's of Science in Management in 2006. He also earned his MBA from Tennessee Tech University in 2018, and he has later earned his CPA designation in 2020. All right, so things that aren't on the paper about Justin. He also has an incredible wife, Kelly, right? Is it not on the paper because I'm not supposed to tell? Okay, good. All right. She's still incredible. She's still there. And we've got girl dad, and here's boy dad. Justin has two beautiful blonde boys, Samuel and Harrison. And look how proud he is. Very proud. All right, so we can go back to Philip for a second. Philip. You heard Philip's bio earlier. Philip is like my big brother. And I'm an only child, but do any of you have older siblings, and like your whole job in life is to make sure that you're torturing them? I never got to be a little sister until now. Mess your hair up. See, I love messing with Philip. We're good friends, and so glad to have you here. Finally, Christina Atkinson. She's scared. She's giving me a look. what can I say about Christina? I'm not going to say a single thing because she's my boss. So, seriously, I'm not messing with her hair. Anyway, Christina, you heard about her experience. Guys, I met Christina when I was a member service rep back in 2005 or 6 or something like that, and was new to the credit union movement. But I met Christina very early on because she was very needy when it came to ACH. And I knew a little bit about ACH, but the thing about Christina, I knew immediately that this woman knew her stuff and was like one of a kind. And wait, I know what I can do.
Don't touch me.
You want me to hug you?
No.
Okay.
I don't do hugs either.
We're great friends too. So anyway, welcome to the senior leadership team -1, and we hope you enjoy the roundtable. Thank you.
Thank you, Karen. Did anybody notice that what was talked about came to fruition? Because yesterday I said we're not going to talk about some things just yet, and then Miss I can't wait on a Christmas present did it. She didn't even know what I was going to talk about yesterday, but she basically just introduced December 25th on December 24th for you. So well done. But yeah, we do have a lot of really cool things coming. I'm going to tell a real fast, short story between Christina and Karen that I love to use often because it's no longer true. But when Christina came on board at VolCorp, Karen actually welcomed her on board and said, "Welcome to the place where good ideas come to die." Because we had lots of ideas, but we just didn't get them done. We didn't execute. We didn't get them to the finish line. Maybe it was economic crisis. Maybe it was busy with mergers. Maybe it was the quality of our strategy and the execution didn't align. There were lots of reasons that we had all these great ideas, but we just couldn't get them done. But now things are getting done. And that's very exciting. So just a couple of things before we get into the roundtable. First of all, I wasn't able to be in here this morning for the initial opening welcoming remarks as we were in board meetings. So I wanted to also welcome you to the forum. I know most of you were here yesterday for the annual meeting, some last night for the party, which was a lot of fun. Also want to say special thank you. Well, I don't know, I can see lots of lights and a few faces, but Matt and Brad, there they are. Thank you to CU Investment Solutions for sponsoring the party last night. Everybody had a lot of fun, and those guys are part of what made that possible. So thank you to those guys. I forgot to mention that last night. Also had a couple of questions asked of me after my presentation that several people asked me. I could clearly hear the theme. So I have a couple of things to provide you. One, an update. Morgan is doing well. She told me yesterday was the first day she felt normal, and last night she used the word great. So several people ask about that, and I realized pretty quickly I probably should have given that part of detail too when I told you the rest of her story. She's doing well, so thank you. And yes, the rest of us tested negative, so all good at the Mary household. The other thing is, yes, the presentation. A couple of people asked if my presentation yesterday would be available when I put out the, in case you missed it, article. As soon as I can get that done, it'll be available there too. So just a couple of answers to questions I received several times yesterday. But now on to the roundtable. I am going to give you full disclosure. This is a beta. I won't call you our guinea pigs or test dummies because that just doesn't sound very inviting, but we are using you all as a test to figure out what we want to do going forward. This is supposed to be a roundtable discussion for you all to share with each other. We wanted you to be able to meet the rest of the senior leadership team, absent of Jeff Dato, because he's, as he has mentioned, is in Chattanooga, headed this way. But we wanted you to be able to meet everyone because we have undergone a reorg and wanted you to know who these folks are. But it's not really for us to talk. It's really for you all to share. We do something with the board. They get together in person in a non-COVID world every quarter for an in-person board meeting, and we take them to dinner, and it's the entire board and just one person from VolCorp just to kind of pick up the tab. But the idea is for them to be able to have some non-VolCorp conversation to network so that when their time on the board concludes, there is residual value for them from having been on the board with the relationships they develop with each other. That's the impetus for this session. We want you all to have additional value from being here, not just from hearing the speakers that we've brought to the table, and not just from hearing from us, but from hearing what's hot topics for you all on each other's minds so that you can take that value and leverage that when you go back to your shops. So the way we measure the success of this particular session is the less you hear from us after I stop the intro, the more successful this session has been, because this is really for you guys to talk. So if you're on live virtually, you can drop comments or questions in the chat. We have Trevor back there to man that for us. And so we will be able to hear from you as well. You don't have to just be in the room. And with that, I'm going to open up the floor for discussion. So if anybody's got a hot topic, and just be warned, if you don't start with one, I'll call on you. Okay, I won't really call on you. I'll call on Christina because we have a loaded question to start things if you all don't. But I would like to just open it up. What are you guys facing that you'd like to hear from each other? Hey, we got this issue going on. What are you guys doing about it? That sort of thing. Go. Come on, crickets. So everything is smooth and easy at all your shops is what I'm understanding. Nick.
The live.
We talked a little bit this morning about the perils on the balance sheet, et cetera, challenges. But what about some challenges due to non-interest income? In particular, the legislation's out there that's been out there for several years, but it seems to continue to prop up related to overdraft protection and NSF fees. I think most recently, the target's been that I think it was Bank America, even though they did waive a bunch of fees for COVID, that they still earned $1.5 billion in overdraft fees during COVID, and which has kind of resurrected the target of change to limit our abilities to charge for that with legislation and regulation. So I just wanted to see if anybody had any thought on that, or your thoughts on how do we replace that income if that income probably doesn't go away, but will substantially decline in the future. Yes.
So Nick, I'm going to throw into that. I think we're going to need that magic 8-ball back that I had this morning, because how do you replace it? Your net interest margin is already low, right? And now it's hitting your fees. And we already heard today about SRM talking about interchange, Reg 2 coming. Your interchange is going to be, it's going to go down if, if that passes. And now you've got overdraft protection. The thing I think that's hurting credit unions right now is not only that the banks are stopping those fees, but I don't know if you guys saw the quote from Todd Harper from NCUA board that says he thinks these fees should be eliminated. That we should be particular in who we charge these fees to and how many we charge. I think on the regulation right now, they're saying one a month with a cap of 6 a year. How many can survive on that? And so, have you guys thought about that in your shops? Have you looked at that? And I'm getting blank stares from the lights. Oh, thank you.
So one of the interesting things that I've read recently is, and I can't remember, I believe it was a credit union went to like a subscription program where you paid a monthly fee and they would let you overdraw up to $50. If you did not overdraw during the month, then you got $5 rebate on the subscription, which sounds really neat. But it sounds like a programming nightmare and something that our core would charge us like $50,000 to write and put in place for us. But I did think that was one of the most interesting solutions that I had read to charging per transaction.
And of course, the lawsuits related to the fees for when items are presented second and third time, we're going to need programming to identify those. I know our core probably can't do that. I don't know if VolCorp is able to do that on their side, but that's going to be something we really need to hone in on, because the larger credit unions are starting to see some impact, and, you know, we're all could be targets for lawsuits. So that's going to be something that we're going to need help on.
Stronger topic, because if you really kind of look at it, we don't have a lot of control other than programming, but there is a lot of suits that I've read where the overdraft has occurred because of the holds being placed on electronic transactions. You know, whether it's they put 120% or whatever that percentage is when you use that debit card at a hotel or a restaurant to allow for potential tipping. And that is the result of a overdraft. And the lawsuits have been settled in the banking world, at least, because they've had to change their processing to where it's more batch processing, and the posting would occur at the end of the day instead of the time of the day, or when the actual hold is released and the transaction is actually posted. So the legal side is I think going to become a bigger topic.
I think we all need to be really diligent in really fighting for our members in this regard, because I do think that at some point, if overdraft as we know it goes away to some degree, there will be some other business that will pop up and will really fill that gap. And it's probably going to be a non-regulated business. And so when you think about what's best for the member, while, you know, you can regulate their decisions, they're going to go elsewhere for that. I also think that, you know, what will probably also happen is that free checking won't be free checking anymore. So to kind of fill in that gap and that loss of revenue, probably most banks and credit unions alike will probably discontinue free checking. So to some degree, there is going to be a huge impact on our members. I know that if you have a carefully managed program, you kind of manage really those accounts where there may be some abuse. You know, doing our best efforts really to make sure that they're making informed decisions, I think is really important. We need to continue to do that. But what I hear over and over again is people sometimes ebb and flow when it comes to budgets and money and needs. And so they'll get in it for a period of time, and sometimes that lasts a couple, 2 or 3 or 4 months. And then they get out of it with either our help or just with more income that's being produced within the family. So in my thoughts on it are, we need to really make sure we're the voice for that consumer, for that member, because it is a need, and it does fill a need. You know, when you think about it, you can, our members sometimes choose to pay their credit card on time by using the overdraft, right? Because what's the repercussions if they don't pay it on time? Well, generally there's like a, you know, $40, $45 fee for a late payment. And then at the end of the day, their interest rate's going to go up to the maximum rate charged for that card. So the consumer really does not have a choice when looking at that sometimes. So my opinion is we've got to make sure that message is heard really loud and clear, and that we really do represent that member's voice in trying to fight this.
Can I ask a dumb question? Being the investments non-payments guy? I don't know.
Just screen. Yes,
I guess I'm. Okay, so I have a dumb question, being the investments non-payments guy. Is there an ethical dilemma to not charging this fee for your membership who are not utilizing this, and therefore you're giving interest-free lending to folks that are potentially abusing the service, that the other aspect of the equation is not being compensated for. Does that make sense? I feel like if they just did away with this fee, they're letting this group off the hook, and the other hook that's funding it is not being spoken for as well. Typical Wall Street guy asks the unpopular question.
I will say this, I do think that, I don't know if all of you are doing this, but when a member finds themselves really in a situation where they can't repay these fees quickly, in that 30-day period or whatever, are most of you guys converting that to a loan, an interest-free loan? Most everybody. And giving them 9. Ours is actually. And so they actually have 90 days to pay it without any interest on that money. And so that does, we've got to communicate that to our legislators. We've got to communicate that to, and if you don't have one, it's not really a bad thing, because what we're finding is that if we if we have an interest-free loan, which we do today, our losses have really gone down substantially. So we're not closing the account, having to reopen the account, losing the member, for life. And it's just a lot of value in really offering that interest-free loan. So that may be also a solution that we can put in place together as an industry to kind of prove that, hey, we are really trying to help. And so ethically, to your point, you can look at it from 2 different angles, but I think that we have to make sure that if we have a program like this, that we have a solution to when people really get in deeper, then they can really pay back in 30 days. So.
Did we depress you again? We talked about investments. Now we're talking about fee income.
What else is top of mind? Done.
We've had some internal discussion, and I'm curious as to what, I didn't hear any difference, but I'm curious to see what y'all think, if y'all had any thought on the price on used car loans specifically, but even new car loans. With the chip shortages, we've all seen those used car prices just skyrocket. My son, who's a car nut, tells me every day how much his truck is worth more than what he paid for it 2 years ago. I mean, he's ready to cash in and collect $15,000. I keep asking him, what's he going to buy? So, but anyway, we've seen these used car prices. We're lending on used cars. It's our bread and butter. I know it's many of y'all's as well. Have y'all changed your loan to value ratios and how you go about doing that? Are you changing your lending process, qualification processes at all to deal with that, or thinking through the future, potential losses, greater losses in the future if you have to take that vehicle back or anything? Just an issue for us, not nobody else.
For those that can't hear, there is laughter in the crowd.
Oh.
Curious thought. Thanks.
For those that can't hear, there's uncomfortable silence in the crowd.
For those who can't hear, he said, what'd you say?
We recognize the risk that we may have some collateral issues on potential future repossessions. But at our credit union, we've been lucky enough that our repossession history has been very low, and therefore we're willing to live with that risk.
I was just wondering, with electric vehicles coming around, I don't, if anybody's done a lot of them, but more importantly, have they repoed them and then tried to resell them? And are they taking a real big hit on them? Because I don't know how many people, Like if you do a loan, we don't do luxury loans, so we don't do Lamborghinis and Bentleys and stuff like that. Because if you have to repo them, there's not too many of our Kroger membership that want to buy them, right? So with that being said, is we're in the South, we're not in California, we're not in the areas where there's more electric vehicles. What, if anybody wants to speak to that and how they see that, what their views are.
It's an interesting question. I mean, I hadn't considered the resale market of electric vehicles.
So if any of your shops taking a stance on that, are you leaning for it, Mark? You calling any of them?
Karen, up front, right, straight in front of you. Yeah.
Yes, we do lend on electric vehicles and high-end vehicles. Generally, what our experience is the person buying a higher-end vehicle or an electric vehicle such as a Tesla, they're usually pretty well heeled, very low debt ratio, putting money down on the transaction. No, we haven't had a repo situation. We've been doing it for several years.
Our credit union rewrote a policy for that same reason. We lend on luxury vehicles, and the board just decided to make the member put some skin in the game. We have a couple of high-end vehicles on our books, and like he said, a couple of Teslas, and you never know, because if they do go belly up, you can't easily get them sold to the members, because a lot of them don't want them. So the board just decided to make them put money down, and that way we're not just all in. So that's another way to look at it.
What else is on top of mind in shops? And we've got some other things we can bring up. It's really for your benefit to kind of get out there what's on your mind and their views. It's always hard in the roundtable, not done it sort of environment before, and expecting some critics, but hopefully at this point, get a little more comfortable. I see Wade pointing at something, but I think that's.
Philip touched on this a little bit this morning, and we're starting to experience the wage inflation in hiring some folks that we've had to hire. It's, people, you're having to, if you want to steal somebody from somewhere else, they're making substantially more than what our standard MSRs are. And then you've got a equity issue on your bench already. Is anybody else experiencing some of that? And that, of course, that's the top line on our expense side, is that salaries and benefits. So is anybody else experiencing that yet?
We've experienced it quite a bit at our credit union. We couldn't keep employees, couldn't find new employees because our salaries were a little bit depressed. So we had to look at all of our entry-level positions, frontline staff, call centers, and do some adjustments. We had to raise starting pay, which then caused us to have to raise some existing employee salaries too. Yeah, it hurt the bottom line, at the end of the day, but we couldn't find qualified staff. And we didn't have any choice because they could go work at McDonald's and make more money.
Yeah, we experienced the same thing. We actually, I think in June, decided to raise our minimum starting wage to $15 an hour. And then just last week, we decided to offer a signing bonus. So we are doing $1,000 signing bonus, $500 after your first 6 months, and then another $500 when you hit the 1 year mark. And it's been a challenge. It's been a real challenge to find qualified employees and to keep them. And I think from a comp to budget standpoint, we're doing awesome this year. But we are down at any one time, up to 50 positions. And that's put a real strain, on the front line, because that's where a lot of our missing employees are.
So I was kind of joking earlier about calling on someone, but I got to do that friendship with the person I'm about to call on. I'm going to do it, even though I wasn't serious when I said that earlier. My good friend Jim Thompson. I'm just curious because you're up in Louisville. Are you seeing anything similar or different from what you're doing up in?
Yes, we are. Actually, I'm toying with going to the board to raise our lowest pay, but I think you got go by Taco Bell. They're hiring $14, $15 an hour. You've got people sitting at home still drawing unemployment in Kentucky, at least they are. And if you can sit at home and make $30,000 at home doing nothing, you can't hire them in at any pay to come to work. So that's our dilemma, I think. We're still hiring people, and we're probably just hired somebody this week. And like I said, I'm toying with something to take to the next board meeting to raise up all my minimum. I'm not going $15 an hour because I'm staggered a little bit, but it's hard. It's hard, and I don't know the answer. I think that this is, they're wanting to keep this unemployment, so they're getting minimum wage up to $15 an hour, which is what they were wanting. And it's going to happen, and we're just dragging our feet a little bit, I think, right now to get there, but it's rough.
Well, we've been blessed that we haven't had anybody leave to have to replace. And so just in general discussions with people, though, I know my wife, she's in healthcare though, but they've had a lot of, but she's in the finance side of it. But they've had a lot of accounts payable, billing personnel, et cetera, leave. There's a lot of movement in that area now that we've kind of reopened, and people are actually actively looking for jobs, and they've had to reevaluate their pay and increase it to keep the people from leaving. And I know it's a very tough decision, but I know my personal side of it is it's going to be a challenge on all the smaller credit unions, particularly because of your resources and you're already struggling for net income. But I also have to look at it from, the cost of housing and rent is outrageous. Can you imagine raising a family on $15 an hour? When it probably costs you $10 an hour to have a car, that type of thing. I mean, it's the compassionate side is, our cost of living has actually risen pretty significantly over the last 10 years or so, particularly in housing. That is an area that we do have to figure out what the answer is for that, because I think we all, if you own a home, we're probably all reaping the benefits of our house being 2 to 3 times what we paid for it 20 years ago. So if you haven't, you're not reaping any benefit. And so if you are saving for retirement and having money in your 401k, you're reaping that benefit of the stock market being worth triple what it was 20 years ago. But if you haven't made enough wage to be able to put anything in your 401k, then you haven't reaped any benefit from that. So it is a tough struggle, but we're, we have, our tellers make, I think it's like $14 an hour now. I've talked to some of my banking friends, and they're sitting there saying, the tellers are overpaid at $11 an hour. So we're paying above market from a banking perspective in our area. But on the other side, if you go to the big 15, 20 top banking institutions, BB&T, et cetera, I mean, they're paying $17.50. Now that's a little misnomer too, because a lot of times they go out and hire temporary help. They're not employees. And so how they market, what they're paying and what they're not is somewhat skewed. But I know in a recent CUNA economic, roundtable discussion, they have made the indication that to keep talent, credit unions are going to have to really challenge what they're doing with pay and pick and choose, who needs to be there, who's so important to your organization, and how you're going to retain them. Because their comment was, I think it was Bank America they were going to move, or they've committed that they're going to go to $22 an hour within the next 3 years as a starting pay. And granted, their starting pay is different because, I know some banks that hire college graduates, marketing students, and in particular, to be incorporated into their, yeah, my time limit's up. Can I yield to the senator from Kentucky? But you have to look at that side of it too.
Carter Ridgway, do you have a question? Okay.
You can hold it so I don't keep it. Hey, if this is a good for this, but y'all too, if cash goes away, we're thinking in the head, to me, I don't deal with cash at my credit union. I do send them to share branch to get it, but you guys do. And you'd save on Loomis Armored Car, you'd save on all blah, blah, blah. I'd save on some of that with kind of share branching. But then do you all see opportunities for us to make more money? Are we just going to see savings if that goes that way? Extra expense with the electronic transactions that are going, electronic competitors that may take a lot of our business away and offset those savings we have. I'd like the perspective, I think, mainly of you guys. I'll just leave the question. Don't answer if you don't want to, and we'll talk later. But what you all are doing for us or thinking for us, giving us ideas, the whole mesh. But good possibility cash will kind of go away over time. They're trying to push it. And we're not talking about privacy issue. That's a different issue. Don't even get on privacy. Just what that would do to us.
For those of you not in the audience, Carla nicely just shut Carter Ridgway down. Carter, I'll just say that I'll let the guys up here talk because I know you didn't ask me, but I'm wondering how credit unions were running for, or not credit unions, credit union members were running for cash a year ago. I mean, our cash vault was stressed to get cash to the credit unions. So it's interesting that you're talking about going cashless, but In times of crisis, people run to cash. What do you guys have to say?
I think I can speak for the whole SLT and say we don't want to answer that question, Carter. No, seriously, you know, I think it's a fascinating question on cash, because when the pandemic hit, the #1 provider of products in the United States became Amazon almost overnight. And so I never really felt like we were going to see the big run on institutions like we saw, you know, before. The problem wasn't having the cash to go buy what you needed at the grocery store. The problem was the grocery store having what you needed, but somehow Amazon could. So I could easily see cash not being nearly as important in the future. And to a large degree, I find that to be a little bit scary. For those that can't see, he is waving a green flag.
And whether it's a cash-based transaction or not, I think it more appropriately dovetails into what Karen mentioned earlier on focusing on retaining those transactions and those payments within our system. To me, that's a larger threat.
Any other comments on that question from you all? About 2 minutes ago, I got the 5-minute warning. So we're gonna have to land the plane here in a second. I don't want to shut anybody down. If you have something that you're just gonna regret later not asking or commenting about. Carter's celebrating back there. See, now Justin's hand goes up. I was gonna say, did anybody notice how smoothly he played that when I tried to call on him? He didn't flinch as if his name wasn't Justin. He just sat there like, didn't hear it, gonna hope Nick answers the question. And sure enough, Nick steps out. Now he raises his hand like he's got something. Don't give it to Mike, give it to Nick. But for the record, if Jim had tried that, we would have kicked him under the face.
No. Now, my question, I know it came up earlier in one of the speakers' discussions, and it was mentioned a little bit ago, but going back to non-interest income, the whole discussion over Reg 2 and the change in interchange and how payments will be routed. We've been going through a debit card processing change and kind of, I've know more about it now than I ever wanted to, but I'm still novice at it. I didn't know if anybody had really delved into and really looked at what could become of that, especially like going into the card not present transactions, changing how they route. And if anybody's really looked at that deeply.
I'm about to put Dale Good on the spot. Dale?
The proposed regulation could really affect the credit unions negatively. One thing I've always done is try to make sure that the partners that you have within other agreements are the best partners for the credit unions, because it can make a dramatic impact. And a lot of people, through using consultants or just using people that have been involved in the networks before, can show you how that can really make a difference. So this proposed legislation, it's something that everybody needs to wake up and take a good look at. You've got to be able to make sure the partners you have are the best ones for your credit unions. And you've got to kind of understand the basics, and everything's kind of not necessarily imploded. Everybody's buying everybody else. And so you've got some strange relationships that you may not even know you have. So it's good to kind of take a good isolate and explode what you're doing and have discussions internally and with other people that are involved in it, so you can kind of make sure that that legislation is not going to negatively impact your credit union. And the only way to do that is to make sure, you know, your partners understand that you understand what's happening, and that your legislators know that, hey, this is not good for us. And it's ultimately not good for your membership, because that income is what helps you provide for your credit union members.
If you didn't pick up on it there, Dale might know a little bit about this stuff. So if you've got additional thoughts and questions, leverage that resource. Karen spoke in her presentation a little bit ago about some of the new additions at VolCorp. We've grown the family here lately. I affectionately refer to it as we've added a lot of horsepower. And I know at least 3 of them, and forgive me if I have missed anybody that's new with us, but at least 3 of those folks are in the audience, Dale Good being one. Josh Yates is over here in the corner, and Trevor Nelson sitting back there helping out Wade. We've added some really great folks that you probably have not yet met. Take a moment, because everybody's got different skill sets, of course, but we continue to try to really add some horsepower, some value, some expertise on staff where we can help in these different types of areas. So I would ask one thing of you all. I mentioned at the beginning of this that this was kind of a beta, test drive, use whatever analogy you want. The thinking here is, again, leveraging what you can learn from each other instead of just what we think is important subject matter to have a speaker talk about. We don't always know what's top of mind for you, though we have a pretty decent sense of it. There's going to be other things that are important to you all that you may want to share or hear from each other about. And that was why we wanted to try this. Big picture, what we're trying to figure out is there value in this for you? Should we do a longer roundtable session next year, or separate from the forum? Should we do maybe earlier in the year a half day or an all day roundtable where you can send whomever you want to send, a CFO, a COO, whomever would be the appropriate person for whatever's top of mind for your shop at that time. So we're trying to see, is there enough value in this leveraging of each other's information for us to sponsor an event focused on that? So that's what this was kind of a test to figure out. So the request I have of you is, when you fill out your survey at the end of the forum, think specifically about answering that question for me. Hey, that was interesting. Lots of crickets. Glad Philip filled in some gaps with some humor that, but maybe that's not the best thing for my credit union. Or that was wonderful. Can we see the all day thing earlier in the year so that it's not limited in time for the forum, or somewhere in between? But let us know specifically what your thoughts are on that, because if there's value in doing this kind of thing, we want to be able to create that environment for you and enrich that experience. So that being said, I've now gone over the 5-minute warning. So I just, again, thank you all very much. I personally am going to be heading to Chattanooga here shortly. We want to support the league and their event. Jeff Dato will be heading this way. So hopefully he and I will wave at each other on 24, and you all will have an opportunity to meet Jeff. But this scheduling situation with the league this year is very much a more like victim of circumstance kind of thing with their contract with the hotel. And we worked with Fred a lot to try to figure out how to do something that would work this year and make sense, but there just wasn't the flexibility there with their hotel. So we're just going to continue to try to support them. They had a representation here with us yesterday, so we still appreciate the league very much. I'm going to head down there for tonight and tomorrow. So I may not get to chat with any of you for the rest of your time here, but I greatly appreciate you being here and supporting us all. If you have questions for anybody up here or anybody else on staff that's present with us during the forum, please don't hesitate to ask. And again, really hope you'll give us that feedback on the survey regarding this session, and if something down the road would make sense. I don't know if there's anything administrative. Wade and I didn't really talk about this. He's doing the food thing. I know lunch is next, but I don't know if you need me to say anything specific. Nope. All right. Well then, enjoy your lunch. Thank you.